Welcome back everybody to episode 23 of Quickfire Crypto, where we keep you informed on a bi-daily basis. If you're interested in keeping up to date on all things crypto, then subscribe to the channel. We put out a new video every 12 hours. So the story this morning is about Cryptocom, which is an exchange and a custodian. And they are saying that the CEO is downplaying FTX contagion fears, saying that he will prove naysayers wrong as withdrawals rise. So now I believe that Crypto.com suspended withdrawals a couple of days ago of USDC and USD Tether, but I understand that they're back up again now. So let's see what he's got to say about this. The boss of cryptocurrency exchange Crypto.com took to YouTube on Monday to reassure users of his platform after the stunning collapse of rival firm FTX sparked fears of a market contagion. In an AMA on YouTube, the platform CEO Chris Marszalek said that his company had a tremendously strong balance sheet and that it wasn't engaged in the kinds of practices that led to the downfall of Sam Bankman-Fried's FTX last week. Now, I've looked at their balance sheet and 20% of their assets is in Shiba Inu. So, I mean, that's just, that is irresponsible to me. But there's a lot of people saying that could be users' funds, and that a lot of Crypto.com customers and users just happen to have a lot of SHIB. I don't know whether that's true or not, but we'll find out. They also sent, by mistake, Crypto.com sent $400 million a couple of days ago by accident to another exchange. I think it was Huobi. I'll have to check on that, but I'm sure. I think I remember it being Huobi, and they did manage to get the funds back yesterday. So they sent them back, but that is a monumental mistake to send $400 million by accident. And if they'd have sent that to an individual and the individual didn't want to give it back, there's nothing they can do. There's no recourse. There isn't even any criminal recourse because he hasn't stolen it. They've made a mistake and they've sent it out. So I don't know how they would even get that back legally. So there's a lot happening at Crypto.com, and people are just really, really hypersensitive at the moment because of all what's been going on with FTX. They're really scrutinizing and criticizing and critiquing all the other exchanges and basically telling them, show us what you've got, show us your assets, because we don't believe anybody anymore. So yeah, our platform is performing business as usual, Marszalek said in the AMA. People are depositing, people are withdrawing, people are trading. There's pretty much normal activity, just at a heightened level. FTX filed for Chapter 11 bankruptcy protection on Friday after concerns over the company's financial health resulted in a run on the exchange and a plunge in the value of its native FTT token. FTX tried to reach a deal to be acquired by Binance, the largest venue for trading digital assets, but this fell apart after Binance backed out, citing reports of mishandled customer funds and alleged US government investigations into FTX. So they didn't want to touch it once they did the due diligence. Alameda Research, FTX's sister company, borrowed billions in customer funds from the exchange to ensure it had enough funds on hand to process withdrawals, CNBC reported Sunday. Bankman-Fried declined to comment on allegations of misappropriating customer funds, but said its recent bankruptcy filing was the result of issues with a leveraged trading position. We never engage as a company in any irresponsible lending practices. We never took any third-party risks, Marszalek said on Monday. We do not run a hedge fund. We do not trade customers' assets. We always have one-to-one reserves, he added. Now, the problem is, this may be true. I honestly don't know. But we heard all this before with FTX. These sorts of reassuring lines that the CEOs come out with a lot of the time have been proven to be worthless and just outright lies in the case of FTX. So people just don't believe. We want to see what they've actually got, and once they show, I think there'll be people will calm down a lot. His comments come after the revelation Sunday that Crypto.com mistakenly sent $400 million worth of the Ether cryptocurrency to Gate.io. My apologies, I thought it was Huobi. It is in fact Gate. Another crypto exchange in October, a mishap that raised fears Crypto.com users' funds may be at risk. Crypto.com and Gate.io said they were sent by mistake and were quickly returned to Crypto.com after the error was identified. Marszalek tweeted Sunday that the firm had meant to send the funds to its cold wallet, meaning an offline cryptocurrency wallet, but were instead moved to a whitelisted corporate account with Gate.io. I mean, that's just already, it's just so bad. In its own statement, Gate.io said the transactions were the result of an operation error transfer and that all assets have since been returned to Crypto.com. In this particular case, the whitelisted address belonged to one of our corporate accounts in a third-party exchange instead of our own cold wallet. He added, "We have since strengthened our process and systems to better manage these internal transfers." That did little to assuage investors' concerns, however, with traders speculating Crypto.com may be facing liquidity issues of its own and dipping into customers' funds after the FTX collapse. Marszalek pushed back on claims it was misappropriating users' funds on Monday, stating in the AMA that we do not trade customers' assets. And if that's the case, then you should have no problem proving it. You've no problem proving it if that's the case. But I mean, Binance have gone some of the way. Binance has shown that they've got around half of the assets that they're supposed to have, but that still leaves a $40 billion question over where the other half are. And we still don't know. But that may take time. Once if they're going to do it properly and they're going to get independent auditors in to do it, then all the better. But that will take days or even weeks. So we'll see. We will just continue with our business as usual and we will prove all the naysayers, and there is many of these right now on Twitter in the last couple of days. We'll prove them all wrong with our actions, Marszalek said. We'll continue operating as we have always operated to continue being a safe and secure place where everybody can access crypto. Analysis of public blockchain data shared with CNBC by data firm Argus shows that from 7 p.m. Eastern Time on Saturday through to 6:30 a.m. Eastern Time on Monday, a net $68 million in Ether and $120 million in other tokens were withdrawn from Crypto.com by its users. Over that same time frame, Crypto.com added $62 million in Ether and $140 million of other digital assets to meet the withdrawals, according to Argus. To its credit, Crypto.com continues to have the funds to meet these withdrawals, lending further credence to its CEO's claims that their assets are backed one for one. Owen Rappaport, co-founder and CEO of Argus, told CNBC via email, Crypto.com is one of numerous exchanges that have committed to providing a breakdown of the reserves that back customer assets to reassure users after the bankruptcy of FTX. So you get the drift. Now, the last thing I would say is what I always tell people: do not keep money on an exchange. Do not keep your funds on there. Send it away, withdraw it, put it into cold storage if you can, if you're capable, if you're technically capable to do that. You can. There's paper wallets now. There's apps. There's even a hot wallet. Even a hot wallet would be better than keeping it on an exchange, because there is less chance of you getting hacked. As opposed to no chance with a cold wallet, but on an exchange you just don't know, and FTX has proven that. And there's just too many questions around all, and there always has been, but now we're seeing the fallout. It's just so please get your money and your funds off the exchange, put it into storage. So that's what I've got for you today. Remember, everybody, to subscribe to the channel, join our team. We'll keep you updated on all things crypto every 12 hours. Smash the like button if you feel you got some value from this video, and I'll see you all in 12 hours.